So this might not apply to very many of you, but municipal bond interest, when you buy bonds, usually you buy them from a municipality like a city, a state, or government. You can exclude interest on state and local governments from your gross income for the state you live in. So if we live in California and we buy California state bonds, the interest is actually excluded from our interest on our income. Okay. So, and there's a formula here that's after tax return equals the tax-free return divided by 1 minus the tax rate. And this is how the tax-free bond is calculated. It's kind of complicated, but let me show you an example of it. So there is a 32% federal income tax bracket. This person's in there, and I invested in Nashville City bonds paying 6%. What's my taxable interest rate? What taxable interest rate will yield the same after-tax return as a bond? And so here's my calculation. 8.82%. So what this actually means is that this is the interest rate that will yield me the same as me buying a 6% bond. So I could actually invest in something that's doing 8.82% and it's going to give me the same thing as 6.62. So let's continue on with our list of things that can be excluded from income. Remember, that's what we're on. Inheritances are excluded from income. Okay. Any income received after from property after transfer. So if I have a rental house and I die and I leave the house to my child and the house belongs to the child now, and now the child gets rent from that house, that is taxable, but the actual gift itself is not. Okay. These types of gifts are excluded from income, and I'll let you read them at your own leisure. Scholarships, you can include some scholarships can be excluded from income only if they cover tuition, fees, books, course requirement, supplies, and equipment. Okay, they can be excluded from income. Alimony. So in order to be considered for alimony, payments must meet the following. They have to be in cash and be sent by the ex-spouse. They have to be made based upon a divorce agreement, not after the death of the spouse. So, and by the way, TCGA eliminated the deduction for alimony. Prior to this, there was one that you could actually do that for. So I'm going to skip some of these slides, okay, and let you go back and take a look at them. You can look at this on your own. Qualified tuition programs. Okay, these also allow you, these are also exempt from your income. So let's actually look at educational incentives. Okay, and again, I'm not going to read all of this. You guys can read through this stuff. It may be very important for you to know that qualified higher expenses are these things right here, especially if you're taking a college class right now. That's considered higher education, and some of that actually can be deducted. You have to be very careful on that. There's more slides on that. There are two major credits that you can apply if you're a college student. One is, and for your college students, one is called American Opportunity. The other is Lifetime Learning Credit. You can take one or the other, but you cannot take them both. Okay, if you set up an educational savings account for minors, I think it might be called a 429 now. I'm not sure what they call it. You can contribute so much per year and it is tax deductible. I'm skipping by some of this stuff. We'll talk about this. Okay. So bottom line is the higher education expenses deduction is no longer since TCGA. And for this point, we'll talk a little bit about this in a future chapter. Unemployment compensation are fully taxable. This is really important for those of you who we just finished the year of pandemic where you got extended unemployment. Unemployment will be sent to you on a 1099-G, okay? And it is taxable. However, because of the pandemic, the government has decided that I think 10,200 of it, the first 10,200 will not be taxable. So you guys need to know that if you got unemployment, it will be taxable. I've got 3 more slides, guys, and quickly, this talks about Social Security, and there's a whole big deal about Social Security as being included in your gross income and how much of it. Community property, I'm not going to talk about that. And that's kind of all. This concludes chapter 2. Thank you very much.